When an asset is newly introduced, it is in brand new price discovery. And so the price is going to be volatile if we put it in dollar terms. It's a great use case for Bitcoin as opposed to merely holding it on chain. It is legal to create a loss using Bitcoin, and you can literally buy it back within seconds. As quick as you can hit the buy button, you can buy it back.
Dude, no freaking way. Eric, I'm going to say some words because my mind just cannot get a hold of this, but preserving capital, love that. Reducing taxes, love that. Building economic maturity across multiple generations. Of course, I love that. I've got a 5-year-old daughter and I just want it to keep going. And then if all I had to say is to accomplish some of those, we have to look at integrating what? I'm sorry. Like when I read this, did it really say Bitcoin? Bitcoin with preserving capital, reducing taxes, building economic maturity across generations by integrating Bitcoin? Oh my gosh. Unpack this for me, Eric.
Well, you read it correct, and that is what it said. That's what the idea behind Bitcoin is, as the potential world's first sound money that the world has ever seen.
Explain that a little bit, kind of unpack that for the audience, because nobody on this podcast, nobody does not understand Bitcoin. I said that wrong, but I think everybody's got a good understanding of it. You work a lot with family offices, but kind of unpack a little bit more about like what you just said about sound money, which is an Austrian economics thing.
Yeah. Sound versus unsound. Okay. So if we just start with a quintessential example of what is not sound money, take fiat currency. In 1971, the US dollar was backed by gold. You could take your dollar and redeem it for a certain amount of gold. Gold is relatively sound, but Nixon goes on TV in 1971, depegs the dollar from gold temporarily, but there's nothing so permanent as a temporary government program, somebody once said. And so here we are 50 plus years later, still temporarily depegged, and I don't think we're going back. What that did was it created fiat currency, which is money that has value by fiat, which is by decree of government. It's basically because we said so. Fiat currency can be printed at will and is by the government. And the more that's printed, the more it debases, the worse, the lower the value gets. So our bank accounts, however much you have in yours and however much I have in mine, they're going to be worth less tomorrow. And then the next day, guaranteed, because the government is never, ever going to stop printing money. Sound money is defined. Yeah.
I was just going to say, thank God, because, I was starting to feel pretty bad about myself when I looked at my bank account this morning. There was hardly any cash in it. I don't keep money in cash. I know it's what makes everything go around, but there's just better assets than cash.
There are better assets, and better for what is the question.
That is a good question.
Sound money is defined as that which can hold its value over time. And Bitcoin was designed to be just that.
Now, let's kind of go deep into Bitcoin because I maybe have a love-hate relationship. Bitcoin has been talked about in all of our circles. We used to bring Bitcoin experts on our trainings, to get a better handle. And the one thing I never could wrap my head around is, Bitcoin lacks intrinsic value. And being a fundamental investor, I've always struggled with that. So I read a book called Inventing Bitcoin, I believe is what it was called. And it helped me really understand the fundamental use case of Bitcoin. And once I understood the use case of it, I really started to like it. But the thing that I don't like about Bitcoin, and I hope there's a solution, I want to get into that in today's episode, is the volatility. And the news is so good about it. It runs up over 120 and then where's it at today? 67,000 and still falling a little bit. Like it's just hard to, for the average person to say sound money in that kind of volatility, because like if we're going to use it as money, as a means of exchange, like we got to get some stability in the pricing of it. Like, do you see a path through where we get stability in the price of Bitcoin?
I mean, it's hard to predict the future, but here's what we can look in terms of how things generally trend when they are an emerging asset. And it's really no different than my 2-year-old, who is almost 3, and my 5-year-old. My 5-year-old is more stable than my 2-year-old is in terms of his moods, his self-discipline, but he's not as stable as my 14-year-old. And I don't think that they're as stable as me yet. That's because I've had 49 years on this earth to get kicked around and mature. Um, Assets are the same. When an asset is newly introduced, it is in brand new price discovery, and the entire world is figuring out what it is, what it means, what are the applications, what it isn't. And so the price is going to be volatile if we put it in dollar terms. But there's also something to help in terms of a reframe. Bitcoin maximalists will talk about one Bitcoin equals one Bitcoin. This might be a different topic if we want to dive down this rabbit hole, but so Bitcoin is volatile if we default to a fiat currency standard. In other words, when I think of the price of a pack of gum, when I hear that word price, I think literal dollars and or cents, right? Because that's the world we've grown up in. Maybe somebody who's on the yen thinks in terms of yen and whatever the equivalent of yen cents are, but that's a default to fiat currency thinking. What if we defaulted to Bitcoin? And let's just say that dollars were to go away altogether. And now when you think of the price of a pack of gum or a gallon of milk or a house, we think in terms of Bitcoin. So a question to consider is the price of stuff out there in the world, goods and services, volatile compared to Bitcoin? Or is Bitcoin volatile compared to that stuff? Or are we talking about Bitcoin being volatile compared to the dollar? Because it's volatile compared to the dollar.
Definitely talking about
right now.
Compared to the dollar.
100%. And I know that that's what you mean, but I'm trying to reframe it as if you compare Bitcoin to the price of stuff, let's just say real estate over the past 10 years, real estate has gotten cheaper compared to Bitcoin when you zoom out and take a look at the long term versus real estate has gotten more expensive. What's that?
I've never looked at it like that.
It's just a helpful reframe. That's why Bitcoiners say one Bitcoin equals one Bitcoin. No matter what the price is compared to the dollar, one Bitcoin is always still one Bitcoin.
Interesting. So when we look at the downside risk of Bitcoin, what would you say the downside risk would be? Because like a lot of people, traditional advisors, traditional thinking, we look at Bitcoin as being ultra speculative, but everything we're talking about here, the preservation of capital, that would mean it's not speculative at all. So how do we define that speculation versus downside risk and put that into perspective like you just did?
Yeah, this is a good question. Downside risk, if we're going to live in a fiat world, which we do, and we have to, downside risk is the volatility risk. If I buy Bitcoin at $100,000 and it drops to 68 and I sell it, it's just like a stock in the sense that I've locked in my loss. Mm-hmm. If I can manage to hold through that and Bitcoin, goes to 110, then I've made money, but I have the emotional experience of going through that very heavy volatility. So there's downside risk there. That's just anybody who says that that's not the case is just either ignorant or lying. But there's another important downside risk that I think gets overlooked. And I think it deals, it's pertinent to family offices, but really anybody who wants to responsibly custody their Bitcoin. There are technical considerations, like by putting my Bitcoin on Binance versus Coinbase versus Fidelity versus straight cold storage. There are risks, pros and cons with each of those platforms. And so downside risk of pure cold storage, for example, where I hold my keys, the downside risk there means maybe I lose my keys.
And that's Bitcoin like that guy that looked for years and years in the garbage dump for his computer that held his Bitcoin.
Yeah, his girlfriend made him get rid of the miners because it was making the apartment too hot or something like that. And so, yeah, that's the rumor. We're laughing, but that's really unfortunate.
He's not laughing still.
No, he's not laughing. So there's a couple of downside risks, at least when we talk about Bitcoin. It's a volatile asset, no doubt.
But let's talk about that one downside risk where you're talking about, Coinbase and the different places you could hold Bitcoin. How is that any different than where we hold our dollars? I mean, like if you had your money in Silicon Bank, I'm sure you were pretty much freaking out. And very well, many of those people should have, even though they didn't, should have lost a lot of money because they had over the 250,000 FDIC limits. But the government made them whole probably because of who it was, not so much what it was. But that's risk, right? Like Silicon Valley Bank, mismanaged funds, had a run on the bank. They had to sell their bonds. They sold their bonds in a period of time when interest rates are going on. The bond prices were severely depressed. Belly up, done. and then it just kept going. We had a couple of banks go under this year, Chicago Bank. So I know we don't look at that as a speculative risk when it comes to where we hold our fiat dollars, but it sure the hell is. It is no different than what you just said in the way that I look at it. I know everybody's like, oh, it's fine, it's protected. Nobody seems to want to go on. We're told your money's protected up to 250,000, FDIC. Now, I have no reason to believe that they would never make good on that. But like, if you ever actually you can go to ChatGPT or Google and just look at how much money does the FDIC have for every dollar deposited in the United States. Once you look at that, you'll never not look at that again. And you will be like, oh, this whole thing is just about to go under. But we just kind of go along and just accept, because as you described what fiat is, because you're told that it's okay. You're told this is what it's worth. And that's all it is. Where Bitcoin, because it's got a finite amount. And actually, can we just talk about where Bitcoin's at in that cycle right now? I've lost track. I know it was getting to the end and it was slowing way down, and the energy being used to create this final amount of the finite amount was kind of getting bigger and bigger. Like I'm speaking completely with no intelligence about that, but I just remember that from the book.
Yeah. Are you asking about the amount of Bitcoin in circulation or the energy use of Bitcoin?
Well, both. I mean, because there's only going to be a finite amount of Bitcoin. Is that a correct statement?
That's correct. 21 million hard cap, and there will be no more Bitcoin.
And how many do we have right now? How many have been minted?
20-ish million.
Okay, so that is correct. So we're close to the end.
We're close to the end. It'll take about 100 years to mint the rest of the Bitcoin.
Right, because the closer it got to the end, the harder and slower it went, and the more energy it took to get to that end. Okay. Well, I didn't know it was 100 years.
It's about 100 years. The release schedule is, I don't know the word's not deteriorating. It's diminishing. Less Bitcoin is released per block confirmation, which happens every 10 minutes. Every 4 years, you have what's called the halving. And the halving refers to how many Bitcoin are rewarded to the miner for each block confirmed. And every 4 years, that amount gets halved. And in the next 4 years, it stays the same. The next 4 years, it's halved. And so it's a diminishing schedule. Yeah.
Okay. So here we are. We're far into this. We've seen multiple cycles. We're on another downward cycle, in terms of price. And, when you look into the future, which I know you can't predict it, like, will there ever be a use case where Bitcoin can be used to buy just about anything? I mean, I feel like we started getting there, but then I feel like we took a step back. And I feel like every time we have these downward plays, we take a big step back from a pure psychological standpoint of looking at what is Bitcoin and how viable is this? Where when it was up, in the 120s, I believe, I don't remember where it pegged out at, but when it was getting up there, everybody's like, oh my God, this is the greatest thing ever. And then it pulls back, and then it's, it's the worst.
Yeah, it is the worst in people's minds when it pulls back. And then, when it goes, there's a mania. And that's kind of the nature of Bitcoin right now. But to your core question, you're asking, I think, a more deeply fundamental and principled question.
Probably, because that's how I think.
Yeah, I hear first principles in how you're asking. And the answer is there are really two uses of money. If we're going to talk about Bitcoin as potential money, there's two uses. Medium of exchange, absolutely, is what you're driving at, but also a store of value. And so where we're at is Bitcoin is getting close to 20 years old. Where it's at in its cycle appears to be the market appeal for Bitcoin is not currently medium of exchange. And I'll go into what that is in a minute. But where it currently is a store of value. So if you listen to much Michael Saylor, he's very big on Bitcoin as a store of value. Whereas if you listen to Robert Breedlove, he speaks a lot about it in terms of medium of exchange. Store of value simply means I'm going to make this money through my business, and I'm going to store it in a place where it will be sound, or I believe it will be sound. It will hold that value ideally over time. That was gold for however many thousands of years.
I feel like it still is gold. I mean, if you look at the price of where gold is with the, fear of the dollar devaluing, like I think it's still definitely viewed as a store of wealth. Same with silver.
Yeah.
So precious metals, but also Bitcoin too. I mean, when gold was skyrocketing, Bitcoin was skyrocketing. They're not correlated, but it appeared for a little bit that they were.
Absolutely. I mean, Bitcoin, silver, gold, Bitcoin, silver, even stocks can be a store of value, but nobody calls stocks money.
No.
So when we're talking about money, a loan, yes, that's right. So you got the store of value aspect. And with where Bitcoin is in its maturity cycle, store of value, it appears to be the main appeal. I mean, the US just adopted the Bitcoin strategic reserve.
Mhm.
They're not looking to spend that Bitcoin. They don't look to spend their gold at Fort Knox if that still exists. So medium of exchange is the other potential use case of money. That's a much more on a daily basis sort of thing. So that's why when I have $10 in my pocket and I go to buy breakfast, that's a medium of exchange. My dollars have to have certain characteristics in order for that to be an easy transaction. One of which is I have to be able to transact fairly quickly. I need to be able to swipe my debit card or just hand the person the money and off we go. The problem with Bitcoin, base layer Bitcoin, as a medium of exchange is that the blocks take about 10 minutes to confirm. That, in my view, makes it not great as an ideal perfect medium of exchange because I don't want to go to the laundromat or whatever and just, wait 10 minutes. We all stand around waiting 10 minutes. If the whole world was on a Bitcoin standard, waiting 10 minutes per transaction would slow the world's economy drastically. Yeah. So what I think needs to happen, first of all, there are payment rails being built for being able to pay in Bitcoin. That's actively being worked on by a lot of developers. But secondly, you have second layer protocols like Lightning that is akin, digitally speaking, to having $100 in my wallet. If I have Lightning in my virtual wallet, I can go pay and the transaction happens really fast. That's why it's called Lightning. And then it settles in Bitcoin. So that's where I think I'm not certain that Bitcoin will ever become a proper medium of exchange. The way it looks to me is that OG Bitcoiners are going to hold their Bitcoin, and it may be used for really large transactions, like 100 million at a time or something like that. But practically speaking, the development is moving toward a second layer protocol like Lightning.
I can see that. Yeah, that would make sense. So, to kind of that would kind of be like having stocks, okay, or stock options. We'll use Elon Musk. You got stock options in Tesla. You don't want to sell your stock options, so you find a bank that will give you a margin loan on that, and then that becomes your usable liquidity that you could use to buy things. Is that an easy way to kind of, for the simplicity, show people how that would function?
I mean, yeah, in terms of liquidity, the difference is Lightning is not a loan against Bitcoin. It's a long asset, but the idea is exactly right, is that you break out liquidity from the asset itself that you can use.
Your real estate business lives and dies by the network and the connections that you make. I mean, after all, your network, well, it's your net worth. That's what you always heard, right? If that's an area where you desire improvement, well, Private Money Club, it's for you. PMC saves you precious time and money by bringing the real estate world, well, right to you, right in the palm of your hand. So get in on the action, like so many others have, by going to privatemoneyclub.com and sign up.
There are places out there that will issue that of similar to a margin loan against your Bitcoin holdings, is there not? Okay.
Oh,
so
yeah, absolutely.
So you can leverage your Bitcoin and use margin or bank money, is what you would say, turn it into fiat so you can go spend it and buy things. And then,
yeah.
Okay.
That's right. If you need fiat, you can definitely do that against your Bitcoin.
I'm just trying to figure out like the liquidity aspects of Bitcoin without affecting, because obviously I'm in the space of privatized banking. So we use specially designed whole life. But then what we do is we take loans from the insurance companies where our money doesn't leave the account. So it continues to earn uninterrupted compounding interest. But we have liquidity because we're using the insurance company's general account. They're basically advancing us death benefit, while we're living, and then they're just subtracting it in case we die, and that's how they make themselves whole. So that's how we use that. And my mind just thinks that because that's kind of the whole idea of Austrian economics and why we, teach becoming your own banker. It's just back to those same similar functions of sound money. But fiat money is not sound. So, I like that. And I like the idea of Bitcoin as a storage of wealth more so than a means of exchange. And Saylor is a good example because, look, when I look at investing in Bitcoin, which I have been, I dollar cost average into Bitcoin and I just don't even look at it. But when I think about like an actual investment, I would look at Saylor's company because now I got an actual functioning company that has large amounts of Bitcoin that feeds into that price of the stock. So that to me is just a more logical way to invest in it. What are your thoughts around that? Because there's a lot of people that talk about this.
It's a great use case for Bitcoin as opposed to merely holding it on chain. Saylor is being very innovative with what he's doing, offering MSTR, which is, as you're saying, backed, over leveraged, backed by Bitcoin. He's also got his ticker, and I can't remember what it's called. I think it's STRC, which is designed to be a very stable preferred stock. The NAV is not supposed to fluctuate. It does, but it's designed to be real stable. And then that pays a variable interest rate, like 9-10% right now. So yeah, it's more than simply about Bitcoin itself. It's about what Bitcoin allows for. And it can be a very good way. Like my downside risk mitigated Bitcoin portfolios use MicroStrategy or strategy stock as a very small part of the holdings as a growth kicker, because the upside growth is asymmetric.
So let's talk about, because you work a lot with family offices and we work with a lot of family offices as well. Let's talk about, like, how do those discussions go with a traditional family office that is used to investing in fundamental, investments like stocks, real estate, any of those. And then they're looking at Bitcoin as a diversifier or a different asset allocation. Like, how are those discussions going? What are they talking about?
What family offices talk about, oftentimes without talking about it, is they don't want to lose money. Capital preservation is the number one thing undergirding everything that they do. And the reason, I think, is because, if I have $100 million, I'm much more concerned with not losing that 100 million than I am with doubling it. Whereas if all I have is 100 grand, it might be worth it to take a swing and try to double it. The loss doesn't hurt as bad. It still hurts. But, losing money for a family office can mean embarrassment in front of the family. It can mean not protecting father's legacy. It can mean a whole number of different things. So they are rightly concerned with preserving their capital, just full stop. If they can't get their money back, if they're going to lose money, then they're probably going to be pretty skeptical. So where we're at in the adoption cycle right now is some family offices, Bitcoin really freaks them out and they don't even want to consider it. Some of them are in principle opposed to it, just maybe even by their governance. So their board has said no cryptos, that sort of thing. Some of them are looking into it. What I've seen is that a very small percentage of family offices have really done the work to study out Bitcoin at a very deep level, put more than 10 or 20 hours of study in. Some of them have, and we can spot each other in a room if we've never even met. What's most common right now, I think, at this point in history, and from what I've seen, is that FOs will buy Bitcoin like on Coinbase. They see it as a trading asset. They'll drop $1 million in at a time. It's a drop in the bucket for them. And they're not opposed to it, but they simply haven't studied it yet. They're thinking of it in terms of a gambling asset that they're just having fun with, as opposed to something like sound money or a medium of exchange, that sort of thing.
So I just Googled something, and this is something that perplexed me. Okay, it just shows you how fast time goes. In 2020, one of the companies we work with, which is Mass Mutual, a household name that all the folks listening to this know, Mass Mutual made a bold statement by going public that they were going to take $100 million, which to a giant mutually owned insurance company is pennies, but still to us, it sounds like a lot of money, $100 million from their general account, and they were going to buy Bitcoin. They were the first in this, and obviously the insurance industry is like the dinosaur age, right? Like they just failed to want to move to current times. So when Mass did this, it was just like, what in the world are they thinking? They're going to lose all their money. So now that was 2020. Remember, 100 million of BTC Mass Mutual bought, and they got some shit for that. Today, this is interesting. Today, even at the price being depressed today, at 67,000. You want to take a guess at what that holding's worth?
I'm going to say 250.
500 million. Now, they might have bought some more, but it basically says estimated value of over 500 million. And I apologize, 500 million as of December of 2024. So this isn't up to date. That's why. So maybe it's a little less than that. But you think that was a good investment for him? Even if it's only 250,000, wherever it's at. I don't know where Bitcoin was priced at December 2024, but that turned out to be a pretty good store of wealth for him, didn't it?
I can say that I'm a strong believer in Bitcoin. That would be my comment on that.
I'm sure Mass Mutual is too, but when you think about a giant mutually owned insurance company, like they can't lose. They really, their number one goal is to preserve capital, like a family office, because they're making commitments 100 years into the future that they have to fulfill on. So those general accounts, they can't take speculative risks. I can't disclose this because it's obviously protected information, but we go to all the conferences. We're number one with a lot of these companies, and we see their holdings of their general account. And these companies, you would think these giant mutual insurance companies would be all over the stock market. They usually have less than 10% in stocks, and this one has 100 million of Bitcoin, and they're still the only ones. But I just thought that was pretty interesting, because I remember when they did this, and I remember the industry being like, "Oh, that's the stupidest thing I've ever heard of," and well, not such a dumb thing anymore. So back to the family offices, when they're looking at this, they're looking at more of that preservation of capital, right? Is how they're looking at it. But earlier, remember when I first started this, Eric, I started by saying preserve capital, reduce taxes. And so let's just stop there, because everybody loves to preserve capital. Okay. But when I said Bitcoin, they're like, that's not a preservation of capital. But I think we've kind of overcome that. And the Mass Mutual thing just puts the seal on it. So now let's move to the second one, reduce taxes. How does holding Bitcoin reduce taxes?
Bitcoin is not a security, it's property. The IRS considers it property. And so with a security, if I sell a security, I have to wait 30 days before I buy that back, or else it's called a wash sale. And I can't get the tax benefits of selling low, taking a loss, repurchasing instantly. Bitcoin is not the same. Bitcoin's property. So if I own $1 million of Bitcoin and it drops to 900,000, I can sell it, take $100,000 loss, immediately rebuy it, and not lose any Bitcoin. So now I have the exact same amount of Bitcoin, $100,000 loss that I can then use to offset. Potentially, I'm not a tax professional, but against other gains on my tax return.
And that would be a passive loss.
That you'd have to ask your accountant about.
I'm pretty sure. I very much doubt they'd allow that as an active loss. If they did, we'd be having a rush at the door, I would think. So being that Bitcoin is relatively volatile, these folks that bought it at 100, 110, wherever they bought it, and now it's at 67, if they sold it and then bought it back tomorrow, effectively they could take that loss. And I know you're not a CPA, so consult with your CPA for more advice and personal use of that. But as you said it, that's what you could do.
It is legal to create a loss using Bitcoin, and you can literally buy it back within seconds. As quick as you can hit the buy button, you can buy it back.
Dude, no freaking way.
Wow. That one's a hit at parties, I'll tell you.
I did not know that. And my CPA probably wouldn't have said that, but yeah, that's fascinating. That's really, really fascinating. Okay. So after we're done with this podcast, I'm calling my CPA and being like, is this true? Can I do this? And then I'm just going to wait for it to run up, buy a bunch, and then just play that game. Because, hey, you know what? I mean, I know you know this, and I know the family offices. We're not going to get into this because we're not CPAs, but like, do you know what kind of return that creates if you were to have bought it up in the hundreds and sold it now and be able to take that loss? Forget about any gain Bitcoin gets you. That return is pretty damn good just on the tax savings you're going to get from that. So let's go one step further. I want to go a little bit deeper into investor psychology and just how that works. Like when you're talking to people about psychology, what do you think the big mental blocks are? And we can go into like the wealthy folks that you talk to, the family offices. What is the psychology, the investor psychology of how they're looking at Bitcoin before they learn from you or before they kind of really get around or head around it?
Yeah, when I first meet family offices, I will say their concerns are the same concerns as Main Street people. And I don't think that makes anybody smarter or dumber. I think it makes us early in adoption. So I've heard objections that are akin to, Bitcoin doesn't exist. And they obviously know that it exists, but what they mean is it's not tangible. It's not extended in space like my real estate that I can drive to. And so that makes me feel more comfortable that I can go and touch my investment as if my house can burn down. But it's another layer of thinking. That's one that I hear. I hear the lack of intrinsic value objection sometimes. Uh, Government's banning it used to be a concern, not so much since Trump and the strategic reserve. I'd say those are probably the two biggest ones. But I'll tell you a third one. I'm working on a second book, which is covering this topic right now, and it is emotional and psychological, and it's called differentiation. Edwin Friedman talked about a failure of nerve in his book, A Failure of Nerve. And what he talks about is how anxiety transfers in family systems from one member to another. And so highly differentiated families can hold their position under pressure versus lower differentiated families or individuals have trouble holding a position under pressure. They're more into comfort versus truth. The reason that I say that is Bitcoin is the ultimate differentiated asset. Bitcoin does not pay attention to whether or not you're adopting it. It does not and cannot change based on consensus or approval. If the president hates it, Bitcoin goes on. If family offices love it, Bitcoin is unchanged. Bitcoin is designed to never, ever change. It's the only asset that I know of in the world that's like that. It can't be negotiated with, and it really cannot be governed. It is what it is, and it does what it does. The reason that I say that is that's very polarizing. That makes people nervous. And so my thesis in my second book is that if a family is undifferentiated or lower in their differentiation level in terms of how they handle anxiety, Bitcoin will feel threatening to them. Now, it won't register to them as I am threatened by Bitcoin. That's a highly differentiated thought to think. Oh, it's self-aware. It will just come across as, ew, get that away from me. I don't want to touch it. It's gross. It's a speculative asset. It's junk, whatever. Now, not everybody who says it's junk is also automatically less differentiated. But my point is, I believe that is the undergirding principle that drives people to be polarized against Bitcoin and to not even study it. Because the goal is actually not to buy Bitcoin. It's merely to study Bitcoin. And my belief is that the value in Bitcoin is actually studying it. Now, once you own it, it changes you, in my view, that it's changed me. But the study itself of Bitcoin is actually it can be threatening and quite a stretch. And if a person does not love that, I think my observation is they tend to stay away from Bitcoin.
Let's talk a little bit about the volatility. We started with the volatility because that's a big hang up. It's been a hang up for me, looking at it as a major hold for any of our funds or our hedge fund for that matter. But the one thing that I've been studying, because you just mentioned, you got to study. So I've really studied, and I know we kind of talked offline a little bit about the Genius Act and the Clarity Act, but I've talked to some really smart people about what will it take to provide stability underneath the crypto environment, or specifically, we could just talk Bitcoin here because that's your area of expertise. And what he was saying is the biggest issue we have right now is there's a lack of a liquidity pool for crypto, or we'll just call it stable coins. And because people that have Bitcoin, when it goes down, they feel scared because there's just no safe, exit or safe place where, and I'm saying this wrong, so I'm going to try to get this correct, as correct as I can. What the government's trying to do with the Genius Act and with the Clarity Act, which will be coming, is provide an actual bank depository for stable coins, which is, a digital dollar or cryptos, if you will, where you can deposit, your stable coins into a traditional bank and then use that stable coin and it would convert, 1 for 1 with the dollar. So Clarity Act will give us all the clarity we need. Now I've become infatuated with this, and primarily for selfish reasons of I know I can create the pathways, the rails, if you will, for banks to be able to make those deposits, because banks are just too ingrained in just legacy software that I feel like the JP Morgans, the big old banks, I don't know how they'll transition to that, but I got a private banking system that operates just like true banks, but it's all privatized, and I could create those pathways for depositing of a stable coin or any type of a crypto, and we could just do it using whole life insurance. So you take the cash value whole life, you bring it up into the chain, you tokenize it, you take real world assets like real estate from Private Money Club, you tokenize it, you create a marketplace, you bring it back down into fiat. So we've talked to our developers and we're like, yeah, there'd be about a $3 million, guesstimate experiment, but we could build that, and I think it would work. And then you just have to see if you can sell it to a bank. But nonetheless, like, what are your thoughts, if you have any, around this whole like adoption of stable coins being able to be deposited in traditional banks, giving stability underneath things like Bitcoin to provide less volatility?
I'm not as much of a general crypto expert as I am a Bitcoin expert. So I don't have a ton of thoughts on that. What I do think on it is that it's a good thing when crypto in general is expanding how the free market operates. And when it gives us more options, that's a good thing, as long as it's backed by something that is solid. I'm not a huge believer in banks because I don't trust
Good.
the
We
fractional
share that
reserve.
one. I hate banks.
Yeah, I just don't trust the fractional reserve system for being off the gold standard. That makes me a little nervous. So I think banks experimenting with this stuff can potentially be a good thing. I don't see Bitcoin as something that is in need of help. That I think your question, if I'm hearing you right, may presuppose that the volatility of Bitcoin is bad or it needs stabilization. I'm not bothered by that. I'm not planning on spending my Bitcoin ever. And if I need to spend money, I'll probably buy Lightning if we end up on a Bitcoin standard. But the volatility of Bitcoin is part of a feature in my view, not a bug. And so I want to hold Bitcoin. I mean, the last studies I looked at show about a 98% chance of coming out positive if I hold my Bitcoin for 5 years or more. So from a long-term perspective, I mean, we don't think in terms of stocks being too volatile, so we need something to, back them up. We just accept that stocks are volatile. AI stocks are volatile because it's an emerging market. That's how I view Bitcoin as well.
That is a really good way to look at it. And you're right. The volatility is a positive for you because you get to buy. You just get to keep rebuying at the lower prices. You get to keep tapping into those tax advantages. I'm going to tell you, like, that's going to change probably everything with how I think about investing in Bitcoin, because I'll look at it the way you are. And, right now I just every week I do, my dollar cost averaging into it, and I don't even look at it. I do XRP, I do that. And the XRP is really just because of the Clarity Act. But now looking at it from a tax standpoint, I want to pay more attention and be like, oh, wait, what did I buy that? What's my cost basis? Sell it today, buy it back tomorrow. And then hopefully my CPA says, yeah, that's how it works. Wow, I'm going to get really active in this. That's going to be fun. Now, let me ask you kind of one final question here. Like, how is it that you get paid? Like we talked about all this. I know you work with family offices, but I don't even know what you do besides you own a bunch of Bitcoin, which probably is just enough. But like, how do people work with you?
Yeah, thanks for asking. So I have a RIA, registered investment advisor, and I really have two channels that I can work with family offices in. At least right now, we're always expanding. But the first is I can manage on-chain Bitcoin for a family to execute things like tax loss harvesting. So if Bitcoin drops, I can sell and then rebuy, and they can lock in their tax loss. And I charge a assets under management fee for the management of that on-chain Bitcoin. The second is through my platform, Charles Schwab. I have worked with Calamos, who is the third largest alternative asset manager in the country, to develop and build downside risk mitigated Bitcoin exposed ETF portfolios. Those are really and those are Bitcoin exposure in a traditional feeling wrapper. You're going to open an account at Schwab, you're going to get a Schwab statement just like your stock account, but it's going to be Bitcoin ETFs, MicroStrategy stock, that sort of thing. But there's a downside risk mitigated element built right into that. And those are for families who like the idea of Bitcoin exposure, but maybe through governance or just personal preference, they don't want to be exposed to full volatility. So maybe we have 30% downside capture as opposed to 100% downside capture, that sort of thing.
That's awesome. Yeah, I see. I did not know that. I kind of guessed that when we talked earlier about regs and things like that. Wow, there's not many people that are doing what you're doing, is there?
I was built for something that I don't know that a lot of people were. That doesn't make me better or worse, but I do know that this is what I love doing, and I was put on this earth to do it.
Well, that's fantastic. And I'm sure this audience listening to this, there are going to be a bunch of people that want to talk to you about that because they want to get into Bitcoin, but they want to manage the downside risk that you just said in the latter part of what your RIA does. So how do people learn more about that? How do people get in touch with you? What are the best ways to do that?
Yeah, my email is eric@veritaswealth.net.
All right. And then any minimums for the clients you take on? What is the minimum AUM that you'll go with?
$50,000 for the downside risk mitigated portfolios. Those things don't trade well beneath that dollar amount.
Well, Eric, this has been fantastic. Really, just fascinating stuff. And I love how you unpacked all the different elements that I had like written down here as being, nope, there's no way Bitcoin can do this. But you completely pulled through and told me exactly how you do it. And I love it. Thank you so much.
Thank you. It's been a pleasure.
All right, folks. Well, thanks for joining us for this episode of Money School Elite, and we will see you on the next one.